Most traders love pullbacks. They see price dip, they rush in, and then they watch the market keep moving against them. And when that happens, they all ask the same question: why did this pullback fail? The truth is, pullbacks don't fail randomly. Most traders just enter them in the wrong place. In this video, I'll show you how I actually trade pullbacks using nothing but support and resistance, and why this alone keeps me out of bad trades. Most traders treat pullbacks like discounts. Price goes up, price pulls back. They buy, but markets don't work like that. A pullback isn't automatically a buying opportunity. It's just price moving temporarily against the trend. If you enter without a reason, you're not trading, you're guessing. That's why pullbacks feel random to most traders. Sometimes they work, sometimes they don't, and the trader has no idea why. A pullback is simply a pause inside a trend. In an uptrend, price moves higher, pulls back, then continues. In a downtrend, price moves lower, pulls back, then continues. Your job isn't to predict where price will go next. Your job is to identify where price is most likely to react. And that comes down to one thing: location. When I'm looking for pullbacks, I don't start with indicators. I zoom out. I look for areas where price has reacted multiple times before, and I mark my support and resistance. These areas tell me one thing: this is where buyers and sellers have made decisions in the past. Now here's the important part: when price breaks away from one of these levels and starts trending, that old resistance often turns into support. Not always, but often enough to matter. So when price eventually pulls back, I'm not guessing where it will stop. I'm watching to see if it comes back into that same area. That's the only place I care about pullbacks. Most traders get this wrong because they buy pullbacks too early. They enter just because price is falling, not because price has reached an area that actually matters. A pullback in the middle of nowhere has no reason to stop. A pullback into a well-defined support zone does. That difference is everything. Let me show you what a losing pullback looks like. Price is trending up, everything looks bullish, price starts pulling back, traders jump in immediately, but there's no clear support below, no prior reaction, no level price has respected before. Price keeps falling. The pullback didn't fail because the trend was wrong. It failed because there was no reason for buyers to step in there. That trade was never high probability. Now let's look at how I actually trade pullbacks. Here's another chart. The first thing I do is mark a clear support zone. Price has reacted here multiple times before. Price breaks above it and starts trending higher. Later, price pulls back, right into that same zone. This is where I slow down. I'm not buying yet. I'm waiting for confirmation. A bullish candlestick appears at support. That tells me buyers are stepping in at a level that already matters. That's where I enter the trade, not because price is cheap, but because price is reacting where it should. Same market, same trend, completely different outcome. I don't try to catch the entire move. My exit is usually the next resistance level, because that's where price is most likely to react again. I trade from support to resistance, with my stop loss placed just below support to control risk. That keeps my trading simple, controlled, and repeatable. This approach works because I'm not chasing moves. I'm not predicting tops or bottoms. I let price come to areas that already matter, and I only act when the market gives me a reason. That's the difference between emotional trading and disciplined trading. If this helped you see pullbacks differently, I share further breakdowns like this in a free space. Links in the description. Like the video if it helped, subscribe for more, and I'll see you in the next one.